Welcome to the 2016-2017 New Hire Benefits Orientation for ASICS. ASICS is proud to provide you and your family with a comprehensive benefit package, and we hope that you'll find this presentation informative. Remember that in addition to this presentation, you also have the Benefits Overview brochure and the Benefits Center website for more information. If after reviewing these you have any questions or you need additional information, please contact Human Resources. But today, during our presentation, we are going to go over the 6 questions that you should ask yourself about our plans. Question 1, how am I affected by health care reform, the Affordable Care Act? Medical insurance is still required by law. ASICS coverage benefits you because ASICS pays part of the cost, and you get a tax savings on your share of the cost. Our benefit plans are higher benefits and include more providers than marketplace plans, and the value of your medical coverage, not taxable to you, will be reported to you on a 1095 tax form. Number 2, what plans do we offer? For medical plans, they are offered through Anthem Blue Cross. California enrollees can enroll in the Anthem HMO, PPO, or the Anthem Luminous HSA High Deductible Plan. Non-California enrollees can enroll in the ePPO plan or the Anthem Luminous HSA plan. The aspects of an HMO plan are that you do need to choose from a list of network providers, and there is no coverage for out-of-network providers. You do have no claim paperwork to process on an HMO plan, and you do have more predictability in your costs as far as copays are concerned when you do use coverage in-network. For the PPO and EPO plans, those plans are PPO plans where you have more freedom in who you can see. You have a lower deductible. Again, you can choose any doctor that you want to see, but you are going to have a better benefit if you stay in-network because those doctors have agreed to reduce their fees. And your deductible for in-network office visits is waived. And there are some services that are not covered out-of-network on these plans. The Anthem Luminous HSA High Deductible Health Plan is a plan where you do have a higher deductible. You still have that choice to see any doctor that you choose, but you will use or pay less when you use an in-network provider. And you do have to meet your deductible on this plan before the plan pays for benefits. But you do have the tax-free health savings account, or HSA, to pay upfront costs, and we'll talk a little bit about that later. But all of these plans do include free in-network preventive care. If you are a California employee, you are eligible to enroll in the Anthem HMO plan. And this plan has no deductible, and you do have an out-of-pocket maximum protection on this plan of $2,500 for an individual or $5,000 for family. That's the most you're going to pay in a calendar year for any copays and prescriptions through the calendar year. So if you have a catastrophic health year, you're never going to pay more than that in a calendar year, but it's not a deductible. Preventive care on this plan is covered at 100%, and office visits for your primary care doctor is a $30 copay, and your specialist will be covered at a $40 copay. Keep in mind you do need a referral for specialists from your primary care doctor. So you'll want to see your primary care doctor first, and they'll refer you to a specialist within the medical group that they are affiliated with. Hospitalization for inpatient is $500 copay regardless of how many days you're in the hospital, and outpatient surgery is a $250 copay. Your emergency room copay is $100, but again, keep in mind that's for life or limb-threatening situations. You want to use the urgent care for urgent needs, things like colds, flu, your child has an earache, you need to access care outside of normal business hours, you would use the urgent care, and you'll only pay a $30 copay when you use urgent care, but it has to be the urgent care that is affiliated with your doctor or medical group. Your prescriptions on this plan are covered at $15 for generic, $30 for brand name, and $50 for non-formulary. If you're taking any maintenance medication, anything you take daily, weekly, or monthly, you'll want to look into the mail order. They're going to send you a 90-day supply of your medication, and that will be sent direct to your house. It's really convenient. You don't have to be running back and forth to the pharmacy. So we would encourage you to look at that if you're on any maintenance medication. For the ePPO plan for non-California residents, this plan is a PPO, so you can go in or out of network, but if you use the in-network services, it's going to work more like the HMO plan in California. So you do have the freedom to go in or out of network, but the benefits for in-network on the ePPO plan for non-California residents is like the HMO California benefit. So you have no deductible in-network. You still have that out-of-pocket maximum protection, $2,500 for an individual, $5,000 for family. That's the most you're going to pay in a calendar year in-network for services if you have a catastrophic health year. Preventive services are covered at 100% in-network. You have a copay for office visits where your deductible, well, there is no deductible, so you pay a $30 copay. And inpatient hospitalization at $500 copay. Outpatient surgery is $250 copay. And that urgent care copay of $100, that's waived if you're admitted, but then you're going to go to the admission copay. And keep in mind, again, emergency room, life or limb threatening. Any urgent needs, you're going to want to go to an urgent care, and that's a $30 copay if you're in network. Prescriptions on this plan are $15 for generic, $30 for brand name, and $50 for non-formulary. And again, you get that mail order of 90 days direct to your home, very convenient for maintenance medication. If you use out-of-network providers on this plan, you will be responsible for a $3,500 individual deductible or $7,000 for a family. You do have an out-of-pocket maximum protection separate from in-network, and it's $10,000 for an individual or $20,000 for family, and that does include your deductible. And then any services that you seek out of the network, you're going to be responsible for that deductible plus 50% of the charges. So again, you're going to want to try to stay in network and get more for your money. You're going to pay less when you utilize services if you stay in network. For California PPO enrollees, so if you don't want to go on the HMO plan and you want to go on the PPO, you're going to have a $500 deductible in network for an individual, $1,500 for family, and then if you use out-of-network providers, you'll have an additional $500 deductible for in-network, for individuals out-of-network, and $1,500 family deductible out-of-network. You still have an out-of-pocket maximum protection. In-network, that's $3,500 for an individual and $7,000 for family. It does include your deductible. Again, your protection against medical bankruptcy if you have a catastrophic health year. And out-of-network, you have a separate out-of-pocket maximum of $7,000 for an individual, $14,000 for family. So on this plan, if you stay in network, your preventive care is covered at no charge. Your office visits are covered at a $20 copay, and your deductible is waived. And then if you need hospitalization or outpatient surgery, you'll be responsible for your deductible plus 20%. The emergency room, you'll be responsible for your deductible plus $150 copay and then 20% of services, and that's in or out of network. And then urgent care is for those urgent needs like we talked about out of office hour visits, or if you have a cold, flu, something basic that you want to go to urgent care for, it's $20 copay. Again, the emergency room, life or limb threatening situation. And then your prescription drugs on this plan, $15 for generic, $30 for brand name, and $50 for non-formulary. And again, you do have that mail order option. So on this plan, you do have the option to use out-of-network providers or facilities. You will pay the separate deductible, and you'll be responsible for 40% of the charges after your deductible. So again, if you use those in-network providers, you're going to have a greater financial benefit than if you use out-of-network providers. Also, make sure if you are having surgery, you want to check the facility and make sure they're in network, and that way you won't be surprised when you get a bill and find out the facility may have been out of network. If you are going to enroll in the Anthem HSA High Deductible Health Plan, this is a PPO plan where you're going to have a higher deductible. So your deductible in-network is $1,500 for an individual, $3,000 for family. Out-of-network is a separate deductible, $3,000 for an individual or $6,000 for family. And then again, you have that out-of-pocket maximum protection in-network, $3,000 for an individual or $6,000 for family. Out-of-network, $9,000 individual and $18,000 for family. Those do include your deductibles. And again, that's the most you're going to pay in a calendar year if you have a catastrophic health year. It's really your protection against medical bankruptcy. In-network, your preventive care is covered at 100%, and then all other services are covered at your deductible plus 10%. Out-of-network, you're going to pay that separate deductible, and then you'll be responsible for 30% of the charges after that. And prescription drugs, your copays are $10 for generic, $40 for brand name, and $60 for non-formulary. You do have that mail order option where you get the 90-day supply sent to your home for the separate copays. On this plan, keep in mind that the plan does not pay any benefits until you've met your deductible. So this is going to be a plan that you are going to pay upfront your deductible before anything is paid by the insurance company, but you do have that HSA or health savings account component where you can put money away on a pre-tax basis, and we'll talk about that in just a moment. So what is your health care profile? So if you are somebody that wants to pay as little out of your paycheck as possible in premium, and you want to save money for future health care expenses, then you want to look at the HSA or high deductible health plan. If you are somebody who wants to have the freedom to go in or out of network, the flexibility to see any doctor that you want to, and the flexibility is more important than what you're going to pay at the doctor's office, then the PPO plan will be right for you. And if you are somebody who wants to keep things as simple as possible, pay as little out of your pocket when you access care, and you don't mind paying a little bit more when you have your payroll deductions for premium, then the HMO plan would be something you'd want to look at. Additional features on your medical plan are that you do have the Live Health Online Anthem telemedicine service. So this is a downloadable app for your cell phone, or you can visit them online to register. And it's fast and convenient. It does give you access to doctors 24 hours a day, 7 days a week, and you can receive medical care for things like cold, flu, sinus infections, things like that, pretty basic stuff, but you'll pay a copay when you use this service, and the copay is $49 for HMO members and also for those HSA or high deductible health plan members. On the PPO plan, the copay is $20, and on the ePPO plan, the copay is $30 for this service. Other health benefits that are available to you, of course, are dental and vision. Those are both offered through MetLife. The dental plans, you have an HMO and 2 PPO plans you can choose from if you're a California resident. If you're a non-California resident, you have the choice between 2 PPO plans. And your vision care is a PPO plan. It's through MetLife, but it does use the VSP, or Vision Service Plan Network, which is the largest network of vision care providers. For the dental HMO plan for California members, you don't have a deductible on this plan, and all of your services are based on a schedule of copays. You can access the copay list either by calling MetLife or going on to the Benefit Center website. But on this plan, anything related to your preventive care services is covered at no charge. And then I would really recommend that anything that you have to have done beyond your regular cleaning and x-rays and maybe a saline here or there, that you get what's called a written treatment plan, and that's going to be where the dentist or the dental office is going to tell you and list out the procedure codes and how much your copays are for each covered procedure. So there are going to be procedures that may not be covered on this plan, but the important thing is to get that estimate up front so that you can prioritize what work you're going to have done first. And also, you know, if the dental office is going to be assuming that you want to upgrade any services. So they may assume that you want a white filling instead of a silver filling. And of course, that's going to be a higher copay. So you're going to want to pay attention to those things. It does cover braces for children and adults. And the copay is $1,695. And this is for a standard 2-year treatment of silver braces. So if you're going to have any other kind of treatment, then you'll have to work out what the payment difference is with your orthodontist office, and they will, I'm sure, make payment arrangements with you. So those are things to be aware of on the HMO plan. You do have to use an HMO MetLife dental office, and you do want to pre-select that dentist front, and that will be pre-designated with MetLife. If you want to change, you can change anytime. You have to call MetLife first. On the PPO plan, so you have a high plan and a low plan, and they're both great plans. On the high plan, you have a $50 deductible for an individual, $150 for family, so that's 3 family members would satisfy the deductible for the entire family. You have the freedom to go in or out of network. You can use any dentist you want. You're always going to get a better benefit if you stay in network. And the calendar year out-of-pocket maximum benefit for in-network providers is $2,250. So that's the most they're going to pay for your dental claims in a calendar year for each covered family member. Out-of-network, it's $1,750. And then your preventive services are covered at 100% in-network. Out-of-network are covered at 80%. Basic services, fillings, extractions, periodontics, which is like gum work, that's covered in-network at 80%, same out-of-network. And then major services, crowns, bridges, dentures are covered after your deductible at 50%. So again, your deductible is going to apply for basic and major services. Braces are covered for children and adults. It's a 50% benefit up to $1,500. And that's per covered family member, and that's a lifetime benefit maximum. Out-of-network, it still works the same as far as using in or out-of-network providers, but you have a $50 deductible in-network for an individual, $150 for family. Out-of-network, you have a separate $100 deductible for an individual or $300 for family. And the benefit maximum on this plan, so the most the insurance company is going to pay for covered services, for each covered individual on the plan is $1,250. Preventive services are covered in-network at 100%, out-of-network at 80%. Basic services are covered at 80% in-network, 70% out-of-network, and major services are covered at 50% in-network, 40% out-of-network, and you have the same orthodontic benefit, 50% up to $1,500 per covered person, and it's a lifetime benefit maximum. So on the PPO plan, again, if you're going to have any work done that's outside of your regular cleaning and x-rays or a filling, something basic, you're going to want to get what's called a predetermination of benefits. So this is where the dentist is going to submit to MetLife and get a quote on what the insurance company will pay towards your procedures. So that way you know what your financial responsibility is, again, before you begin the work. So just a helpful tip there. With your vision plan, it is offered through MetLife. Your vision plan through MetLife, it is using the VSP network. It is a PPO plan, so you can go in or out of network, but again, you're always going to get that best benefit if you stay in network. Your vision exam is covered at a $10 copay every 12 months, and your lenses are covered at a $25 copay every 12 months, and your frames, you have a $130 frame allowance every 24 months, and then anything over the $130 allowance, you get a 20% discount. And then for contact lenses, every 12 months, you get a $130 allowance. If you are going out of network, you're going to have to pay upfront for the services and then send your bill to MetLife, and then they will reimburse you up to the amount that is listed on the right-hand side there. So if you paid $150 for your exam, you're only going to get reimbursed $45 from the insurance company. So as you can see, it's a greater benefit to stay in network for your vision care. For your flexible spending account, so this is an account also known as an FSA. It's offered through WageWorks, and you can put away money on a pre-tax basis into a health care spending account and then separately into a dependent care spending account for health care and dependent care spending. So you're going to save tax dollars on the HSA account. You can, or excuse me, not the HSA, on the healthcare portion of the FSA account, you can put away up to $2,550 before taxes for qualified health expenses, which include healthcare, dental, and vision. And the nice part about this is that the funds are available on day one that you are eligible for the plan. If you are enrolled in the HSA plan, you are only eligible to participate in the limited purpose flexible spending for health care. And what that means is you can only use those funds for vision or dental, not for health expenses. For the dependent care, you can put up to $5,000 away per calendar year on a pre-tax basis to pay for dependent care expenses. And the expenses that you incur, you can reimburse yourself from your WageWorks dependent care FSA. And the access on these funds, it's only as it's deducted from your paycheck. So you can only reimburse yourself what's been deducted from your paycheck. And eligible expenses include daycare, in-home care for children under the age of 13, and incapacitated tax-dependent adults. One thing to note is that you may incur claims through December 15th of 2017, but all claims must be submitted to WageWorks by December 31st of 2017. Anything that's not incurred or submitted by the deadlines really falls into the use it or lose it policy. So if you have put more money away than you've submitted for reimbursement or incurred claims for, you will lose those funds after the deadlines. You also have a flexible spending account for transportation expenses, also through WageWorks, and this is so you can set money away on a pre-tax basis for qualified transportation expenses such as monthly parking or monthly transit. You access money only once it's been deducted from your paycheck, and you can change your elections or stop contributing during the plan year, and then you'll use your account balance later in later plan years if you have a balance follow over or carry over from the current plan year. The transit benefit is subject to change, and if there are any changes, then we will let you know what those are. Income protection is very important for every family, and ASICS understands how important it is, so they provide each employee with a life insurance benefit that is company paid, 1 times your annual earnings up to $50,000. And then if you want to purchase additional life insurance on a voluntary basis through payroll deduction, you can do so. The coverage is offered through Cigna, and you can purchase for, as an employee, in $10,000 increments up to 5 times your earnings, but not more than $500,000. For your spouse, in $5,000 increments up to $250,000. The coverage will not exceed what you have been approved for as the employee. And then you can also cover your children up to $10,000 in coverage in $5,000 increments. As a new hire, you're eligible for something called guarantee issue. So what that means is you can apply for coverage up to $100,000 for yourself, $30,000 for your spouse, and then all children coverage is guarantee issue. But what that means is you're guaranteed to get up to those amounts without answering any medical questions. So if you apply for more than those amounts, you'll have to fill out a medical questionnaire or a explanation of benefits, and that goes to Cigna, and then they will underwrite the insurance. And the information you provide on those forms is confidential, so you don't have to worry about that. But you also have a disability program for short-term disability. It covers 55% of your weekly earnings, up to $2,500 per week. And those benefits begin on the 8th day of your disability, and the maximum duration on that plan is 25 weeks. These benefits are offset by state disability, so if you live in a state where you have state disability, your benefits through Cigna are going to be reduced by whatever you have received or are eligible to receive under your state plan. And then long-term disability is covered by the company as well through Cigna. It covers 66 2/3 of your income, or 66.67% of your monthly earnings up to $5,000 per month. And the benefits begin after 180 days of continuous disability. Again, those are paid for by the company, and there's no payroll deduction there unless you choose to enroll in the voluntary life plan. For life daily changes, the company does also pay for an employee assistance program, or EAP, through Cigna. And this is an outreach program for you where you can call in 24 hours a day, 7 days a week, and you can get up to 3 face-to-face visits for any situations where you need maybe some therapy or counseling or advice. It's online at cignabehavioral.com/CGI, and it covers anybody in your household. It's important to know it's not just for crisis situations, but it's also there to help you through some great things too, so they can help you with legal planning, reviewing legal documents. Maybe you want to set up a will or a trust. Maybe you're looking for some advice on health care or dependent care referrals, things like that. So that's a great resource. So what about the other stuff? As an employee at ASICS, you have additional benefits that are available to you: MetLife auto and home insurance, Colonial Life Insurance for buy-up short-term disability, accident, or cancer policies. You also have a Legal Shield program that you can purchase, and that helps you with legal or identity theft protection. You have nationwide pet insurance. You also have a 401k retirement plan and the 210 Footwear Foundation. So question 3, can you tell me more about the HDHP and HSA? So that's the high deductible health plan and the HSA account. So 5 reasons to love your high deductible health plan. You're going to have lower monthly payroll deductions. You're going to get that tax-free savings for any funds that you put into your HSA account. ASICS does pay a contribution towards your HSA. $500 for an individual or an employee-only coverage, and $1,000 for family coverage. And this does protect you against those large health claims or large health expenses. And your HSA account is affordable. You take that with you. It's a bank account. It's your money. There's no use it or lose it policy on this. So you can choose to reimburse yourself or let those funds roll over year after year. And then the basics of the high deductible health plan are that your deductible is higher than other plans, but your monthly paycheck deduction is lower. You do have coverage for health care expenses until your calendar year deductible is met. So you have the coverage, but you have to meet your deductible first. Your preventive care visits are free as long as you're in network. And then once you've met your deductible, the insurance company does begin to pay a portion of your claims. And then question, who qualifies me, or what qualifies me to open and contribute to my HSA account? So to qualify for an HSA account, you have to be enrolled in a high deductible health plan. You cannot be covered by a low deductible health plan. So if you have dual coverage with your spouse and they don't have a high deductible health plan, you cannot enroll. This would have to be, you'd have to have high deductible health coverage and no other coverage. You can enroll in the regular health savings account or health spending account, and coverage with Medicare, Medicaid, TRICARE, or VA benefits, that would eliminate you from being able to participate in the high deductible health plan HSA portion. So that's that banking portion. And you cannot be claimed as a dependent on somebody else's tax return. So those are the rules on how to contribute to an HSA account, not whether you can spend the money, but if you can put money in. And then just a special warning or limitation, this includes spouse participation in the HSA account as well. Question, how does the HSA account work? The HSA account is an account, it's a bank account. So it's a savings account that you have at a particular bank, and ASICS is going to put money in for you if you're enrolled as a participant, $500 into your account, and then you can put an additional $2,900 into the account on a tax-free basis. And then the funds that you take out to pay for qualified medical expenses are tax-free in distribution. If you take money out that are not for qualified expenses, then you do have a tax penalty that you may incur, and it would be similar to a 401k or a 403b or an IRA distribution. So the account is owned by you. You keep it even if you leave the company, and unused money grows for year after year with no limit. There are some state taxes that may apply depending on what state you live in. And the total account contribution for 2017 is limited to $3,400 or for an individual, or $4,400 if you are 55 plus. If you're enrolled as a family, it operates the same way, with the exception that ASICS is going to put $1,000 into your account, and then you can contribute up to $5,750. Same concept applies for paying for qualified medical expenses, and if you take a distribution out of it that's not for an expense, you do have that tax penalty. The account's still yours, and then the total account contribution for 2017 for families is limited to $6,750 or $7,750 if you're over age 55. Did you know that all eligible expenses, even prescriptions, count towards your high deductible deductible? The best money saver is prevention, so we want you to use those preventive benefits. The next best thing is to go and use in-network providers, and also it pays to shop around. So Anthem does have tools that you can use to shop for reduced cost medications or procedures if you need to get an x-ray or something like that. There's lots of consumer-driven tools out there, not only on Anthem's website, but just on the internet in general. And then also you can sometimes negotiate the cost of your healthcare services. So sometimes if you're willing to pay upfront for services, your provider may give you a discount, or maybe you have a doctor that was willing to accept a reduced rate even though they're not participating because you already have a great relationship with them. And then the IRS has a list of approved HSA expenses, so we encourage everybody to be familiar with what is on that list. And then accessing your funds, it's going to be through Mellon Bank, and you do have a Visa card that you can use, or you can use checks, or you can use a withdrawal form where they will reimburse you for money that you've paid out. And then important for your responsibilities, use your account funds for qualified health expenses, and you need to save your receipts and other documentation such as EOBs, just in case you get a request from either WageWorks or Mellon Bank, or the IRS requests them. So you're going to want to make sure that you keep those receipts. And also you cannot file a 1040 EZ form for your tax return if you contribute or use funds from HSA account. Question 4, what will the plans cost this year? You're going to want to review your semi-monthly deductions. So we have them listed here. They're also in your benefit guide and online, but there is a difference in your deductions if you are participating in the wellness program or the non-wellness program. So if you're not participating, you are going to pay slightly more out of your paycheck for your health plan. And what do I need to do? So you need to log into Benefit Focus, and there are enrollment materials for log-on instructions that are included in your benefit guide and also online. And then what happens if you do not enroll when you're first eligible? Then you will not be able to enroll until the next open enrollment, which is in 2017, unless you have a qualifying event. So if you get married, you have a baby, you adopt a baby, you have a loss of other coverage, or you get divorced. Unless you experience one of those things, then you'll have to wait until the next open enrollment in 2017 to enroll. Meet Ben IQ is a mobile app that you can use that can store copies of your ID cards. It has short videos for you to watch to give you healthcare tips, stores contact information, and you have access 24 hours a day, 7 days a week to the health plan highlights. It also does have a tool on there to help you shop for some of those lower cost services. Your username for California residents or employees is ASICS, and non-California employees is ASICS Americas. So that concludes our presentation for your benefit. I do want to thank everybody for participating in the call today, and again, review your benefit guide, or if you have any questions, you can certainly contact Human Resources. Thank you very much.